Hey Big Bulls, welcome back to another edition of Bullseye, and we got three hot topics for you today.
We are going to talk about ITC's much awaited demerger. We're going to talk about PC Jewelers' shiny stock split, and we're also going to talk about DAM's capital market.
Alright, so Saloni, let's start with the big company in the news, ITC. It's all over the papers. What's going on here?
Right, so in 2021, if you would ask any ITC investors what's an upper circuit, they would just shrug and say, we don't know because we are ITC investors, right? Because the FMCG stock, or rather the meme stock of India back then, had been stuck in a flat range for a while. And this was the time when markets were hitting, highs. So this dull stock performance was based on, many factors. First was obviously the tough regulations that came in, and there were tax hikes, GST hikes on cigarettes that led to certain decline in the tobacco industry. And even for ITC, they saw this decline in the cigarettes volume, which accounted for around 40% of their top sales, right? And on top of that, there was this global shift towards ESG, right? And that led to derating of global tobacco stocks. And because of that, even foreign investors started pulling out from ITC. That led to a decline in the FII shareholding of ITC.
Right.
So ITC shares may have been the punchline of the memes before, but now things changed last year and they have been back in action. Thanks to the announcement of demerging of their hotel businesses, which is going to be effective from January. So they're going to be kicking off the new year with this new change.
That's interesting. But why actually demerge, Saloni? I know that it doesn't really contribute, the hotels business doesn't contribute much to ITC's top line. If I'm not wrong, it's around 2-3% tops. So why really demerge this business entirely?
Right. So as a cigarette to hotels conglomerate, ITC believe that its hotels business is now mature enough to stand on its own. And they also wanted it to have a clear focus and a solid capital structure. And after the demerger, that's going to help the parent company also allocate better capital to this business and also unlock more value for the hotels business as well, right? So that's when in August 2023, they announced the demerger plan. And after the split, ITC will still own about 40% of ITC hotels, and the shareholders will get the other 60% based on their stake in the parent company.
Okay, so can you break down this actual benefit for shareholders here?
Right. So ITC has set January 6, 2025 as the record date to determine which shareholders will be eligible for the new shares, right? So if investors own or buy the ITC stock by that date, they are the ones who will be getting the new shares of the hotel business. Now the demerger ratio is 10:1, which means that every 10 ITC shares that you hold on that date, you will get one ITC hotels share.
Okay, that's interesting. But I also now want to know a little bit more about the hotels business. Just break that piece down for me and help me understand that better.
Right. So it's the second biggest hotel brand in India, and it's mostly focused on these luxury brands like ITC Hotels, Mementos, and Fortune Hotels as well.
But I also noticed something interesting that popped up in the news saying that ITC actually upped their stake into other hotel chains of sorts. So they now have an 8% stake in the operator of the company that owns the Leela Hotels, and a 16% stake in EIH, which actually runs Oberoi. So there's a lot happening on that front.
Yeah, I think that's their plan to kind of, ensure that the hotel business goes big. And the hotel segment actually saw a 12% revenue boost in the overall ITC's earnings during the September quarter. And this business has been growing at that rate since 2021. And when we talk about the valuations, brokerage Jefferies pointed out that it's about ITC hotels is about 4% of ITC's total value. So now this will obviously go, and become bigger, right? And the demerger will lead to ITC hotels have a solid balance sheet, and they're supposed to have around 1,000 to 1,500 crore of net cash with them.
That's interesting. So it does seem like it's a win-win for everyone. The shareholders, the people who are betting on the hotels business, as well as ITC who can pay more attention.
Looks like that for now.
All right. So moving on from ITC, let's talk about one stock that has been actually shining while the rest of the market has been in red. It's PC Jewelers, a company that has been hitting the upper circuit a couple of times this week. They actually announced a stock split in November, and this stock split came into effect on December 16th.
Right. So I want to go back to the basics here and understand what exactly is a stock split.
So a stock split, Saloni, is exactly as its name suggests. It's a company basically just taking its shares and splitting it. So what actually happens is that the share price reduces but the overall value of the company actually does not change. So in the case of PC Jewelers, they've done a 1:10 split. So every share is now actually split into a further 10 shares, and this reduces the price of PC Jewelers share price. And when that happens, when you think about it, the stock price suddenly looks optically cheaper, and it becomes that much more easier for a retail investor to look at it and say, this looks cheaper and it seems like an interesting buy. It makes it more affordable for a lot of investors.
Right. So I think it's for PC Jewelers, the 1:10 stock split means that one shares is worth ₹10. That will become 10 shares worth ₹1. Am I wrong?
So you're right in that, Saloni, but let me break it down a little bit further in terms of the actual example of what happened. But in terms of what actually happened in the market, PC Jewelers was actually, the stock price had shot up in the last 1 year, a 470% rise. So PC Jewelers was actually trading at close to 170 rupees per share. But now, as you said, the 1:10 split, what has happened is, after the split, the one share is now worth around rupees 17, right? So that 170 for one share has now become 17 rupees per share. Like I said, that makes it seem that much more affordable for a lot of people. In some ways, it's a way to actually reward the existing shareholders because they've been with the company, they're holding the shares, and now they're saying, listen, we think the share price might seem out of reach for a lot of people. People may not come in and buy. So we'll make it more affordable optically. People will come in, they'll buy hopefully, and in a sense, you will be rewarded for your patience in staying invested with us.
Yeah, and I think one more thing is that the fundamentals of the company don't change, right? The profits, revenues, margins, all of them remain the same. It's just the stock price that's been spread.
Absolutely, right? The fundamentals remain the same. The overall value of the company remains the same. It's just the share price which changes over here, right? But I also want to highlight here, Saloni, that you really have to be careful sometimes and not just look at the optical illusion the stock split actually creates. You have to do your own research and you have to look at the fundamentals of a company. For instance, PC Jewelers has been struggling a bit with losses, right? So while the stock price has been shining, fundamentally there have been some losses and they've had some issues with their debt levels as well, right? So that's something to keep in mind.
That's good to know, actually.
Yeah. So now moving on to our final story, which is DAM Capital. And for me, this is very interesting because it's an IPO. And I want you to tell me why this actually is very interesting for me. And I can see you smiling already.
Yeah, so been pretty excited to talk about this. See, I mean, IPOs have been the buzzword, right, in the recent years. But what many people do not know is to make those IPOs turn into reality, it's investment banking firms and consulting firms like DAM Capital who make that happen. So you can see like the companies who make IPOs turn into reality are coming up with their own IPO, right? So if I want to just talk about investment banks to understand what they actually do. I mean, think of them as these matchmakers for businesses and investors, right? They're the ones who ensure these deals happen, the process into it. They help them, mitigate the risk. They assess all the strategies, the opportunities. They also help them and guide them in mergers and acquisitions, helping them get it listed into the capital markets. So in short, they are like this middlemen who are trying to ensure that money flows smoothly for the big players in the market, right? And DAM Capital Advisors also does something similar. They focus on helping companies raise capital, they invest in private businesses, and they also provide financial advisory services. And the company makes money by charging commissions or fees on these services like underwriting and also advisory that they give, right? And with the recent market boom, the merchant banking division of DAM Capital now brings about 67% of FY24 revenue, while its share in IPOs and QIPs have jumped from 8% in FY21 to 12% in FY24. And even its revenues have doubled in the past few years to 180 crore from 93 crore between FY22 and FY24.
That's interesting. Okay, so its IPO actually opens today, which is the 19th of December, and it runs till the 23rd of December. But it's also an offer for sale. So it's basically existing shareholders exiting some of their holdings and giving it off to the public. So they're not raising fresh capital. So does it mean DAM Capital does not need the money?
So yeah, it does seem like that they don't need the money and they won't be receiving any funds from the IPO proceeds. But in their CEO words, going public will help them attract talent. They're also planning to launch new businesses, right? So this is a way for the investors to get in early and reap the benefits. Plus, they also want to collaborate with certain global players to boost their M&A work abroad. right? So going public and being a listed company will obviously help them with all of this.
The brand image and all of it,
Yeah.
right? Interesting. But there's something else that we should also probably keep in mind, that this is, in a sense, an investment bank whose business hinges on the capital markets. So when there is a capital market boom, this sort of business does well. And when there is a time when the IPO market dries up and no one's really looking, no companies are looking to go public, then that could be a bit of a slow season for such kind of companies such as DAM Capital, right?
Yeah, that's one thing to remember.
All right, fine. So I guess that's it from us this week, Saloni. We have covered these three very interesting stories, I think, on ITC being, I think, my most favorite story of the day, the DAM Capital IPO. And we have also spoken about the PC Jewelers stock split, right? And that's it from us this week. And don't forget to hit that subscribe button and click that bell icon so that you know when the next episode drops. We'll see you same time next Thursday.